Gold IRAs versus bonds. Which one is the safer bet? When it comes to securing your wealth for retirement, especially for those of you who have built up a solid nest egg, the question often comes up, should you be looking at gold IRAs or bonds to keep your money safe? Both have their merits, but if you're serious about protecting your wealth in the next 2 weeks, you'll want to stick around for a deep dive into why thousands of Americans are turning to gold IRAs as their go-to solution. Before we get started, if you're curious about why gold IRAs are becoming the preferred option for so many retirees with over 100Ks in IRAs or 401Ks, click the first link in the description for a free guide. It's a resource you'll want to get your hands on if you're serious about protecting your wealth right now. Now, let's get into it. Gold, IRAs, and bonds are both seen as ways to safeguard your savings, but they come with different risks and benefits. Bonds are typically seen as a safe investment backed by the government or corporations. They offer a fixed income over time and generally have a lower risk compared to stocks. However, the downside is that the returns on bonds have been consistently low, especially in the current economic climate. With inflation on the rise, the value of bond yields is being eroded, meaning your real return is often much less than you expect. On the flip side, gold IRAs are backed by the value of gold, a tangible asset that has stood the test of time as a store of value. Unlike bonds, gold doesn't rely on interest rates or market trends to determine its value. Historically, gold has proven to hold its worth, especially during times of economic uncertainty or inflation, making it an excellent hedge against market volatility. One of the key reasons many retirees are shifting to gold IRAs is because gold typically performs well when the market is under stress. Bonds, on the other hand, can lose value if interest rates rise or the government's credit rating drops. If you're looking for stability in your retirement, gold IRAs can offer protection that bonds simply can't. But there's more. If you're relying on bonds for your retirement, you could be exposed to inflation risk. With the current economic outlook, the purchasing power of the bond interest payments you receive could be dramatically reduced over time. Gold, however, has historically kept pace with inflation. As inflation rises, so does the price of gold, ensuring that your wealth isn't eroded by rising costs. Now, if you're still thinking about bonds as a safe bet, remember that the safety of bonds comes at the cost of returns. For retirees with significant savings, like those with 100K, 500K, or even $5 in their accounts, seeking growth is crucial. Bonds simply don't offer the kind of growth you need to outpace inflation over the long term. Gold IRAs, on the other hand, provide not just safety, but the opportunity for growth, as gold tends to increase in value, especially in uncertain times. If you're considering diversifying your portfolio with gold IRAs, the first step is getting a handle on how they work. The best gold IRA companies offer a guided approach to setting up your account, giving you access to precious metals like gold, silver, and platinum. And if you're sitting on a retirement account of 100K or more, or even 5 plus, a gold IRA could be exactly what you need to take control of your wealth and protect it for the future. If you're serious about securing your wealth and you have a significant IRA or 401K, now is the time to act. Get your hands on that free gold IRA guide by clicking the first link in the description. It's the resource that could make all the difference. To wrap things up, if you're ready to protect your wealth, especially if you have 100K or more in your retirement account, don't hesitate. Gold IRAs offer security, stability, and the kind of growth you need, and they're the perfect hedge against inflation and market volatility. Click the link now to get your free guide and take the first step towards securing your future. Remember, the right decision today could protect your wealth for years to come.